Okay. So what I was saying is majority of everyone in the group does not have $25,000. So I'm going to try to start trading with you guys in ways that, because if I have unlimited trades, I could be trading all day. Even if I'm losing some of the trades, at the end of the day, I'm winning more trades because of I'm using all the RSI, the moving average. So I'm still netting profit at the end of the day. But for you guys that are limited to specific amount of day trades, you can't just day trade unlimited. You really need to make your day trades count. And so I was just experimenting today with Robinhood, which is, a small account. Yesterday, because I took all my money out of Robinhood, and then yesterday I deposited 250 just for fun, and I bought that Nikola contract, sold that Nikola contract, and then flipped one of these. Um, so so this $31 put right here, you see how it's worth 233 cents now, $233. Um, I actually bought this put right here when it was running, because this is a thing that I knew would happen with Nikola. Okay, so because Nikola tanked so much in the morning, overnight, I knew that as soon as it got to open, it would shove down a little bit more, which is what we got. We got this huge shove down to 28.50, but then I knew at some point it was going to rally back hard and almost like a bull trap, reverse, and then tank back down again. And so that being said, I had purchased one of these puts again for this week. I purchased this $31 put. You guys see how it's $243? I just scalped this from one. I purchased this about 10 minutes ago for $1.60. So for $1.60 or $160, now like 10 minutes later, it's up almost $100. I ended up selling it for a scalp at $2. So I made like 30 bucks on that scalp because I was just trying to, even if we're only using 30 bucks, you only needed $160 to make $30 in about 10 minutes. And that's kind of like if you have 3 day trades on your account or then are also day trading with settled funds, $160 is everybody has that. But then also, if you have a little bit more, you could have bought like 5 contracts. It would have cost you still only about $700. And then having those 5 contracts hitting that 30-40 cent move, or if you waited all the way till now, you would have made $1 move. That's still $500 on your. That would be almost, if you bought at the $1.60, what I did, and then held all the way till now, you're looking at almost $1 profit on 5 contracts, and you only needed $750 to make this 500 right here. So this trade set up perfectly for us, and ran up, found its highest high, got rejected at $32, and is now drilling all the way back to 28.50. Why? Because like we say, stocks love to test their previous resistance and they love to test their previous supports. That's always going to be the margin that um, stocks are going to trade. So that's exactly why now Nikola price is going to 28.50 because it's testing now. It ran up, tried to test over here the $34 range, but got rejected before that, got smacked down at $32. Well, now because we got smacked down on the way to test our high, before we got to our high, that's going to tell us now that we're going to now head back and test the previous support, which is 28.50. So that's exactly why Nikola now is tracing all the way back to 28.50. Now the huge thing to watch here, as a day trader, as a swing trader, and we're doing chart analysis, we say, okay, I know it's going to drop to 28.50, but I'm waiting to enter now. Okay, so I'm watching. Are we going to break through 2850 or are we going to bounce off 2850? So I'm waiting now to watch for this 2850 test, depending on if it's going to bounce or if it's going to fall through. If it falls through, then I'm going to wait a little bit more. By waiting a little bit longer for the price to fall through the 2850, like if it loses the 2850 support, I know it's going to go lower. So I'm going to observe, allow it to go lower, see if then I can find a new bottom by observing the RSI, waiting for that RSI to get to like 1 or even below 1, and then saying, okay, I'm going to hop in here for a quick reversal. I know that we might get some green for a quick lower high, and then exit those calls real quick because you know that puts are the better thing to be on today because we're downtrending. So then I'm going to switch to a put and then ride that put down, knowing that it's now going to keep testing lower as long as it's doing lower lows and lower highs, lower high, and then now trying to make a lower low. I know that it's going to continue to downtrend. So that's why the watching and doing the technical analysis is so important. So it's best if all of us, like, we whip out our phone and we look at the Webull chart on our phone for Nikola with the RSI and the moving average, so you'll be able to see a little bit better, what we're looking at here. Because if we're looking at it now on my end, it's saying that on the RSI 2 we have 150, 1.5, and then now it just pumped up again. The RSI 14 is in the 30s. So all these little bumps, like these little green bars that we're getting, keep in mind the RSI 2, once it gets close to 0, like a 1 or a 2, it doesn't have much more room to keep falling. If we're continuing a downtrend, you're going to get a little green bar, which is going to pump up, which is going to give the RSI 2 a little bit more gas so that it could still now come back down. So what we're going to see here is we're going to see this potentially end up just falling back down as we go and test this, because right there we got to $29 and then we bounced. But if you're watching the Webull chart, you'll see it's continuing now to come back down. Yo, some of you people are new. Seashell, what's going on? You guys can hear me?
Yes, I can hear you.
Oh, hey, what's up? Were you one of the people that DM me? Like
No, I just paid for the subscription.
Oh, you paid for the subscription. Shit.
Yeah.
I gotta put you on Lifetime Tribe then. What's your name?
Shelda.
Shelda? Okay, I'm Justin. Nice to meet you. Welcome.
Nice to meet you.
Yeah.
Thank you.
Is this your first time in a live then?
Yeah.
Okay, awesome. Okay, were you the one that just hopped on the subscription right now?
Welcome.
Okay, awesome.
Thank you.
So because you hopped in a little bit late and this is the first time that you've ever been on here, are you new to Discord or have you used Discord?
I've used Discord before.
Okay. So the live day trading, what you're in obviously is what it says. The fruitful investing, that's when I'll be in that channel if we're going to be doing more like group training, like we're focusing more on training. That's where the fruitful investing, that's where we learn. And then the wall of gains, obviously, once you join us and start learning with us, People end up posting, money that they make with what they learn with us. So that's for that. And then market chat. If you guys anything that has to talk about market, it could be anything. This is just general discussion. So that's any talk about anything, but not about the market, essentially, because that's
Okay.
for the market chat. And then giveaways. We're going to be doing more giveaways every. We're going to try to do multiple giveaways every week. So then there's little instructions every time you fill it out. It's easy. Options plays. These are options plays that I'm going to send the group that I'm going to recommend that you could. There's always a gray area of like having people follow your trades and your signals, and so that's why joining us, knowing that this is purely educational. This is not like professional financial advice. These are just recommendations of things that we look good and trades that myself enter, as well as Miss Ziggy posts some, as well as MKO. So as you work with us and you move up and you start to be really successful with your trades, we have opportunities where you can move up in our group, get administration roles, etc. Maybe even get paid. We can hire you. So we're always looking to hire. All the people that I hire is all within the group. Um, Whether it's like graphic design or website design, or because we have a lot of other things that we're branching into. Like if you offer services or any type of other things, like you can offer it through our platform, and that's all 100% your business. We just want to help support everyone. We're a tribe, we're a family. So all of these in the options, they're going to be sent with stop losses. So this one, I said Nicola with a 10% stop loss. Going to be watching this one closely. We'll exit fast if it starts to trend back up and breaks into $36. So what was I seeing that like made me say, okay, break into $36, we're gonna exit this trade. Hold up, I'm gonna get some water real quick.
And just for everybody who's new here, if you all have any questions, you can feel free to hit me up as well. I don't know as much as Justin, but I am pretty on point with some of the stocks that I trade. So just letting anyone know my DMs are open.
Yeah, Ziggy has been great. So I trust Ziggy. She's gone through basically our full academy and mastered it, and is making plays on her own that, you know, she's got the sniper scope. But to just break down this trade in my thinking, and this is what I'm trying to get everyone to be able to get to, is be able to do these trades on their own. Ziggy is able to do these trades on her own. I don't have to send them to her. She'll find things like this. But and then this is just trying to figure out, like, what am I supposed to do? What should I look for? Well, as you can see, Nicola ran up in the last week. If we go to Robinhood and we look at Nicola on the week, now it's going to be down a lot. But look, this shit was up more than that. This shit was up like 57% when I first, if we go to market chat, Nicola up 57% this week, way above 20 MA. So this is like what you'll start learning with us. It's kind of might be hard to see here, but this purple line, which is where my mouse is, I'll trace it. It starts to go down, and then now it reverses back up a little bit. But this purple line is the 20 MA. So this is like the moving average, which is essentially exactly what it means. It's the average price that the stock has been moving at. So when you have something like this where you get a huge jump off the moving average, like 50% or more, 9 times out of 10, it comes crashing down after. The reason behind that is because stocks always trade with their moving average. So you get these little pumps and spikes off the MA all the time. But if you look at every single other chart, you see it always comes down over time. So if we look at Nikola, you'll be able to see on my screen, this is that same purple line. Okay, so this purple line that you're looking at on my screen is the same thing. And what you'll be able to observe is anytime there's a huge break or movement away from the MA, the purple line, you end up getting, look at here, we're at $93 stock price, but the moving average is all the way down here at 30. So of course you're going to lose money if you invest here because you're paying 90 when the average is 30. So what happens? The price actually crashes all the way down to like 30, even a little bit below it. Anytime it starts to trace all the way back down below the MA, but then you start to see it reverse. You see these green bars. It's starting to reverse now. That's when you can enter and say, okay, we're going to cross the MA now. You ride it up for a quick little cross. Here you bought stocks at about 30, 35, and then rode it up to 40, 45, sold it for profit. You got to sell for profit above the MA. Why? Well, because look, you got above the MA again, this purple line, and it crashes back down. So then exactly what happened here, where we got a huge bounce off the MA, like 50% or more, that's exactly why it tanked and is now all the way down to $29 today. So these are just some strategies that I've been using that have made me successful. And then the reasoning about like, why did I choose the $36 and the 10% for my stop loss? Well, because here's what I was seeing. Nikola ran all the way up, found resistance, and then tanked. And then since then has been trying to, like, if a stock has to keep trending higher, it now has to create a higher high. But all this time, Nikola couldn't break out of this $35 range and go test the 37. So by observing this, see here we had our high and then now a lower, almost like a lower low, lower high, lower low, and then sideways trading, and then a breakthrough. It fell out. And the reason behind this, if I go to drawings, horizontal line, why did I choose $36? Well, because this whole time, Nikola could not break this previous high when it was sideways trading, which is, if I bring it up to $36, that's where this red line is, and you could see it couldn't break through the 36. So that's why I said I'll be watching this one closely. If Nikola does break out and go higher and break 36, I wanted to exit the trade because I knew then it was breaking a temporary high and then would probably go to test 38. So then you wait, like let's say it did break out, we stop lossed out for the 10%, and then we watched this 38 because it very well could come up to this 38, get rejected again, and then get this smackdown. So then what we would end up doing is just re-enter. If you wanted to keep doing this play, you would re-enter the puts up here if you see it start to get rejected again and write it back down. Or you're watching this, it breaks into $38, well then you say, okay, this trade no longer is going to work out because I thought it was going to go down, but now it broke two highs and now is breaking into higher highs. Now it broke $38. Now it's going to go to and test 40. It could still come down after that, but this is just like you don't want to be holding on to trades that are going to be losing, even if it's just temporary. It's always better to just exit and reposition. There's no reason to hold through a loss if you know it's going to go to certain numbers. That's why I said if it breaks $36, we exit, because there's no reason to hold this through to the 38 test. You could just rebuy an entry at the 38 test. It's going to be much cheaper than the stop loss that you took. So I'm trying to preach no bag holding, and that you guys just kind of go in, go out, secure your profit. That way it's minimal risk, maximal return. Obviously, long-term investing is a little bit different, um, but it's those same rules. You want to wait to purchase Tesla. If I go to the daily chart, look at this purple line. Tesla did the same thing. Anytime it ran up super high above the MA, it came back down to touch, cooled off the RSI, got a little bit of room, and then it ran again, and then came back down. So anytime that you purchased shares below the moving average, all these times, you did really well on all your shares. So it doesn't matter. This is just skills that apply to day trading, and it applies to long-term investing. Trading is kind of like universal. It's like riding a bike. Um, but yeah, I don't want to go too much into it today. Um, Shelly, just to answer some other questions you might have, and then swing trades. This is going to be swing trade channel. We send the same thing. We'll be breaking down every trade. This is a trade that ended up doing really successful. This sun run trade. You read some of the reasoning. Positive reversal below the MA. You can start to see that it started to reverse, and then that was at $56. And I had a stop loss at 52, which is right here, this bottom, because I knew if we lost the $52 support, it's probably going to run down to the 40s. There's no point in holding shares. That's why I had the stop loss. Then I had to take profit. And so you probably would already taken your 10% profit unless you were still holding some shares, because let's see, I think run is a little bit higher today. Yeah, so Sunrun is actually doing crazy since I said to buy it. So here it was at $56 when I recommended it on the 18th, and now we're up 16%. So if you held on to it, you would have made, extra. But here I said take profit in the 60 plus range for around 10%. So some people wanted to add this to their long-term portfolio. This still was a good opportunity to add to your long-term portfolio, because we were right at the moving average, now starting to trend reversal and just starting to cross it. So it was looking like a good time to enter regardless. And so this is another, play that worked out really well, but just using the rules that I teach everybody. And if you use these skills with every single trade, you use this thought process with every single trade, you have a target for your profit, you have a target for your stop loss, you did, minimal charting. It's not like what we're doing is rocket science. People who, you don't need to be a stock genius to know how to do this stuff. It might seem like a little bit like it's difficult at first, maybe a little bit intimidating, but this is by no means something that is hard for the average person to learn. So it's just very minimal stuff. It's really just that initial learning curve, getting all the terminology in, getting the understanding in, and then it starts to become like second nature. Today's trades, this is just like, you can talk about today's trades that maybe it's like the option play or the swing trade that you entered. You could talk about it in here. And then long-term investing, these are just all the companies that we recommend to buy. Long-term investing, all these companies have been doing really well. If you see, this is like the long-term portfolio that I posted like a month ago for some people to buy, and a lot of these are already doing really well. And it's not like I was magical. For all of these companies, I did the same thing. I waited until we were below the moving average significantly to buy the shares. So even I bought Nikola here, even though I knew Nikola is kind of a bad company, I still bought Nikola because I knew that $19 was really cheap. I knew I'd be able to swing it, and you can see now it's $30. So Um, and then, so, but I use the same methods. And then basic training, this, if you scroll all the way up, this will have, I recommend everybody watch this first video, Fruitful Investing 001. That'll teach you a lot of basics about chart analysis. And then if you go to the live stream archives, you could watch any of these or all of these. Read the description, like what they're about. Like this one's how to find good stocks. This one's intro to options, spreads. This one's swing trading and options basics. So this will be a archive for you to learn. These are all live group trainings. And then like this one, for example, I'll take clips of it and potentially upload it. If I find that, there's good information that we talked about, I'll upload it into here and you'll be able to watch it back. And then you can obviously check out, we have a bunch of other channels as well, but those are kind of like the main ones that pertain to investing and trading and stuff like that. But I've been talking for a while, so does anybody have any questions or thoughts?
Yeah, when you're talking about going under the 20-day moving average, you're usually speaking about the daily and the hourly chart?
Yeah. So okay, it's a very good question. I'm glad you brought that up. Okay, so we're using the 20 MA. The 20 MA is very common. What are some other common? Okay, the 2, the 9, the 20, the 50. These are some MAs and RSIs that people use. The 2, the number is referring to the chart. So if I now go daily, the 20 MA is the 20-day moving average. If I go to the 4-hour chart, this is now the 4-hour moving average. This would be the 20-hour moving average. If I go to the 1-minute chart, now this purple line that I'm looking at is the 20-minute moving average. So like this is what Tesla likes to do all the time. It likes to test all-time highs, tank at open, retrace, set support, reset the RSI, and then rally and test the highs again. That's what Tesla does like every single day. So you could become a good trader trading Tesla, riding the bull run, selling them, rebuying the dip at open the next day. And then, but you have to wait until you see it trend all the way down. And then you can see here it decided to cross. So once you saw it decided to cross, started to reverse. Like let's say if we change this to lines, okay, then you'd be able to see it more clearly. So here you can see it bounce, okay, basically like 446. It bounced twice, okay. Anytime it bounces multiple times at a certain number, that means that support is starting to be set. So bounce, okay, still a lower high, but now you have a higher low. Now you have a higher high, higher low, higher high, higher low. So that's kind of why it's starting to trend out. Okay, you got a couple confirmations. The reason why here it didn't is, okay, you got the double bounce, right? So it sent it back up, but then you set the higher high, higher low, lower high, lower low. So if you were in this swing trade right here, and you're trying to flip the bounce, you would have entered, let's say here at $51, but then saw that it was no longer uptrending. You would have had to get out for a $2 share loss, because then look what happened. It dropped another $4. But then now you could have done the same thing, waited for it to show trend reversal. And then also, if you were watching the RSI in these situations, interpreting it, you could probably see like here, RSI 14 was still like 35, but now when we're down here, let's see. I guess the RSI was looking good on both. But that's why you just have to be, figuring out, am I swing trading, am I long-term investing? Because if you're going to trade the daily chart, the 1 minute chart, this is day trading. You have to be ready to swing trade or exit, quick, because you could see here, we're way above the MA. So at some point it's going to crash back down to it. We don't know when. I don't know how much longer. I'm thinking Tesla could run to 600, but does that answer your question?
Yeah, definitely.
Okay.
I got it. So pretty much for the day trading is the day chart, and then swing trading.
Swing trading, I'm looking at,
Like
I'm looking. Weekly, yes, you could look. But look, see, like, look at Tesla. Tesla doesn't even trade with his weekly. Or look, I'm on. All right, guys. Okay, never mind. I was on monthly. Weekly, yeah. Look, Tesla almost touched it, right? But look how long. This takes months. So when we go back to daily, daily is going to be a little bit better for swing trading, because it's going you be able to buy here, 360, sell here 450, rebuy the dip, sell, rebuy the dip, sell, rebuy the dip. Now you rode it up big because you got the S&P inclusion news. That's why it's running.
I see the daily is crossing the purple line a lot, so I guess that makes a lot more sense.
Exactly. So the daily, this takes like 2 weeks to cycle. This has been cycling like every 2 weeks to a month. So you're able to swing trades, and this is a really good return. You're able to buy shares. You can always be cost averaging. So like, let's say Tesla starts to fall, I start to buy shares, here at 370, okay, but it kept falling. I maybe have a stop loss on these. Like, if you buy in the 70s, you should probably keep your stop loss at the 70. Like, if you buy at 75, your stop loss should be in the 70s, because if you lose the 70s, you go into the 60s. If you lose the 60s, you go to the 50s. So if you'd have to be like watching these tight with a stop loss, or just be purchasing more shares. If you want to cost average down, you could just buy here, drops to 350, buy a little more, drops to 330, buy a little bit more. Okay, now you bought the bottom, and now it did reverse, and you're able to still sell all of these for good profit. So, a couple weeks later. So these are just strategies you can do. The only bad thing with cost averaging is if it's a shit company, now you're just cost averaging into a shit company that's going down. So I'd only really recommend this with like really popular companies that are continuing to go up, like Apple. Apple was another swing trade that we posted for everybody. If you go to swing trades, Apple was another trade. Apple is below the 20 MA, the purple line. You can see this red bar that brought it below this purple line. I know it might be a little bit hard to see. Okay, so it was way below the MA, and that's significant for Apple, because Apple is such a big market cap, right? 2 trillion. It's a huge market cap. It was below the MA at $1.1385. Let's see when, MKO recommended buying Apple at 114 and selling at 120. So now it's 116, and that's exactly what we saw. So look at Apple. Anytime you can purchase Apple on the daily chart below the MA, you're going to be doing well, and that's exactly what we ended up doing. I had a feeling like it might shove down a tiny bit more when we entered the trade, and so that's why I still recommended it, but I felt like it might drop a tiny bit more, and that's exactly what we got. It fell to like 112 and then reversed. And that's just because I wanted to see a little bit more dip below the MA before it popped up, just based off of some of these other ones. And that's also why I had the 107 stop loss and the 110 stop loss that I recommended. So when we go, when we go to here, stop loss 107 to 110 for a tight one, because you lose 110, you go lower. Long, Apple always goes back up. So even long term, if you hold this for a year, you're definitely going to make money. When we're looking at Apple, what are you starting to see? Like, charting is kind of like what you see. And so that's exactly why I had the 107 stop loss for the last one, because look, if you lose 107, where's the next kind of bottom that you guys see? 102. So that's why it's like there's no reason to hold 107. If it falls towards 102, you can always just sell here and then purchase shares again for like 102, 103, 104, and then ride it back up. But what you're starting to also see here with Apple is here's the resistance. Here's the main like two resistance that's now, if you're in this swing trade, this is now targets for you to potentially sell to guarantee profit, right? So now what can we guarantee? Well, I can guarantee you here now, because Apple was going down, testing its previous low, right? I said stocks love to test their previous lows, their previous highs, okay? Previous high, previous low. It went to 107, reversed. Now we're going, because we set a higher low compared to this one, now we're going to test our previous high, which I could say here is going to be 120, 121. That's exactly why MKO or Mark recommended swinging your shares to 120. If though you're a little bit more of a bull and you think Apple's going to go up a little bit more, then you would wait for this test, see if it breaks it. If it breaks it, well then now you're going to the next one, which would be 125. So you might even be able to swing these shares to 125. And then if it breaks that, what's the next one? Well, now you're looking at like, obviously 130, but now you're looking at 140, which is this previous all-time high. Another nice thing that you could see in this chart is like if we do a trend line, you can kind of see this trend line forming here on Apple. This is not the best line, but you guys can kind of see that. So that's also why this trend line that I'm drawing, you can see, again, it's kind of like following this trend line. Okay, on the flip side, this is kind of like the last thing I might touch on before seeing if there's any trades we could do. And I end the stream, but the reason why, come on, go to Nicola. Okay, the reason why I looked at Nicola and felt like it was going to keep going down is because then when I looked at the daily on Nicola, I saw this trend line, which is going to be, oops. You guys see this kind of how like from here to here to here. This shit was all kind of like a downtrend line right here. So that's why when I saw this, I saw, okay, it's like it pumps to the trend line and then tanks. Pumps to the trend line and then tanks. So that's also why I felt confident in sending that Nicola play, options play to the group. And then exactly like what I said, it's going to test the 2850. If it finds support and doesn't go to 28.50 and lose it, it's going to start to trend back up. But now really the main resistance is 32. No matter what, if it makes a high above here, as long as it's not above 32, it's still a lower high. So it might sideways trade here, but still hit a lower high. And then, exactly what it did here. It wasn't able to break out of the 36. That's why it tanked. Well, here, it's not able to break out of the 30s again. It's going to tank. Is there any questions I could answer? Is anybody confused? Can you guys hear me?
Yeah, we hear you.
Okay.
Yep.
Is this making sense to everybody? So like you kind of understand like, why I'm sending the trades that I do to the group, and then why I have certain stop losses where I have them. It's not like my stop losses are random. However, if you like absolutely know nothing, like even after today, feel like the charting that I did, you could not do on your own, you still need to set like a 5 or 10% stop loss then. The benefit of the charting the stop loss is because then your stop loss could be less than 5% or less than 10%, and then actually be like a legitimate support that if you lose, it breaks down lower. So you're actually giving yourself a little bit better of a trade because your stop loss could be less and then your reward could be more. So, knowing how to do that is definitely beneficial. But even if you can't do that, then just like make a 5% stop loss on your own. And for those of you that have no idea how to do that, all you have to do is a simple calculation. Okay, let's say the stock price is $25. Okay, how do I set a 10% stop loss? Well, what's 10% of 25? 2.5, right? So if I multiply 25 by 0.09, where is this 0.09? Well, if you have 1, which is 100%, you take away 10%, you're left with 0.9. So if I multiply by 0.9, I get $22.50, which is $2.50 less of 25, 10%. Okay, so a little calculation you could do on your own. Okay, share price is 25. I'm gonna have 22.50 stop loss. Okay, that's 10%. If I wanted to do 5%, it's the same thing. 25. Now I'm just multiplying by 0.95. Okay, same thing. 23.75 is my new stop loss, and then it could be manual or automatic. If you go back to that order, you'll be able to do a stop limit order. And if you don't know how to do that, in the basic training, there's a video that says how to do stop loss and set it up. If you're still confused, just hit me up. But otherwise, it could always be like a mental stop loss, right? You don't have to always like set it on your phone and have it be automatic. You could just be watching the share price and say, okay, it's starting to go down. It's at $24 now. It's going lower. It looks like it's going to keep breaking through. I'm just going to manually get rid of this at my mental stop loss, which, you can still calculate. But that's what you would do in that sense. I know that really wasn't your question, but is there any other questions that anybody has?
I hope you guys have a happy Thanksgiving. Stay home, stay safe.
You guys as well. Thank you for saying that. Yeah, I hope everybody has a good Thanksgiving, good time with their family, and yeah, you could use this time to either, if you've been trading a lot, I would say use this time to take a break from the market, reset. You don't need to trade every day, especially if you've been trading every day. It starts to take a toll on your body, and anytime, even if you're making money, it can still be stressful or give you anxiety, stress, whatever. So It's good to reset. If you're new, completely new, you want to start learning, you could use this time to watch some of the archives, some of the videos, do some of your own research. But other than that, most of us have been trading, so definitely use this time to take a break. You could sell all your stocks, exit some of your things that you want to exit, take your profit, and that way you don't have to worry about anything over the weekend. You could just have a nice little vacation from the stock market. So
it's supposed to be fun, not
exactly
nerve-wracking.
Exactly. So if you're not having fun trading, you gotta reset, take a break, paper trade. Paper trade with fake money, real market. That's what we teach everybody to start with, is how to paper trade on Webull.
It builds all the confidence with zero of the losses.
Exactly. So last thing to say that then, Shelly, if you go to free stocks, that's where you'll find the Webull link, and you get free money for signing up. But I'm getting a phone call. I'll be back in like a minute. One sec. For any of you guys that want to take off, thank you so much for coming to the live and sending lots of love. So, and we'll talk soon. But otherwise, if you want to stay, I'll be back in a couple.
Thank you, bro. Love, bro. Have a good day, everyone. See you.
You too. Thank you. You too. Have a great one.
For any of the people on here, quick question. Have you guys been able to set up like an Ameritrade paper trading account?
Not yet. I've used Webull. Trading is a great thing.
I have my paper trade set up on Thinkorswim.
Yeah, so Thinkorswim actually lets you day trade, paper trade options. So it's great for that. Webull is really good for paper trading the shares. You can also do TD. Webull is a little easier to learn at first. But then TD lets you do the options and the shares, which is really nice. But I'm gonna go to the bathroom real quick. All right, I'm back. Do any of you guys have any other questions that I could answer? Check out Nicola chart. You guys see how the two options that I said would happen, one of them panned out, and then exactly what I said would happen if that does pan out is happening. You see how it's going to creeping up to this to test this now, because we've gotten, it fell out, found support, started to reverse, didn't break into a lower low, and that's why we stayed here. If it did break into a lower low below the 2850, we'd be downtrending hard, like in the 20s, 25, 24 right now. But the reason why, because we stayed at 29 and drilled back up, that's now why it's going right here. So these are the margins you can trade as a swing trader to guarantee yourself a minimal amount of profit. It might only be like 1 or 2%, but you're guaranteeing it for yourself. And if you can knock a couple of these out every day, now you're making a couple percent every day and it's like guaranteed with low risk because you're just going in, you're going out, pulling your money out of the market, you know. So it doesn't matter if it tanks overnight or, you know, what happens. That's why I like the, even, you know, day trading, swing trade, like have a long-term portfolio, but you have to make your long-term portfolio with like the daily chart MA. Okay, if you're not making it with the daily chart MA, even something like Nikola, which is a shit fake company so far, you bought below the MA, you had a nice swing trade below, you know, below the MA. This one you got to it. This one below, you ran all the way up to almost 40. So even on a shit company like this, it's still is good to buy below the MA and sell above it. So it obviously you want to do this with companies that aren't Nikola, you know, because Nikola, it has no real revenue. It's all speculation, hype. They have proved nothing so far, absolutely nothing, and they've actually been very sketchy. Okay, their CEO has been sketchy. They've been hiding. They've been lying about a lot of things. Like the commercial that they had for their hydrogen truck, all they did was run the truck down a hill because they didn't even have the engine built yet. Like, it's just funny. It's just stupid shit like that. It's really a joke. That's why the CEO had to step down. Trevor? We check out Workhorse. You know, same thing. Look at how much support Workhorse had established here, sideways trading at this $14, $15 level. So when Workhorse started to fall, it went exactly to that support, didn't break through it, and started to drill back up in reverse. So now if you're looking at this, you see, okay, it's actually looking pretty good to buy Workhorse right here now that it's stayed above and starts to reverse. And then look what happened. You almost made 100%, $15 to $28. That's almost 100% gain. And then here, you know, the RSI got super hot. It was overbought. It had to crash. And then it crashed back down, reset. That's why you're getting another bar here. But the big thing to notice now is now this previous high. You know, you see Workhorse got to $29, but was not able to break through. I don't know if it broke it, you know, okay, it broke through $30, but only went 2 cents higher. So now you have to be careful. It could start now reversing and downtrending, especially if it's not able to break through $30 again. Well, now it's definitely going to head back down. So that's a little bit, you know, another analysis. Everything I'm teaching you applies to every single stock, no matter what it is. But that's why I'm just recommending you invest in good companies that have real revenue, that aren't just speculation. So the issue with Workhorse that I find is all of its hype is based off of the USPS contract with the Postal Service to do all of the post trucks with EV little trucks, okay? But all of Workhorse's value is riding on that. So that's why, you know, when the contract hype dies down, that's why it tanked so hard. But now it's starting to come back because there's a little bit more hype around that contract coming back. But then also Ford Motors might be getting in on it too. That's why I've also invested in Ford and have been telling people to buy Ford, because it's OG. It's a good OG American company. You know, I never thought I'd see Ford at $9, but here it is. You know, Ford is reversing. So don't sleep on, you know, the OG American companies. That's why like GE is also doing so good. These are OG American companies that got real beat up and are now recovering to, you know, back to where they should be. But is there any other questions that I could answer right now that you guys might have, Jesse?
Yeah, I had something in my blanket for a second. Hold on.
For sure.